Hey there, welcome to the Wyckoff analysis for Hedera. So, over the last week, the price has been trading at a narrow range, including this week that's only like a little bit less than 3 days left. And we can quickly look at both weekly and daily time frame and see whether Hedera is heading towards an upthrust, and because the Bollinger Band and Keltner squeeze is happening in the daily time frame, so would there be a big price movement coming? So quickly, starting with the weekly, we have put in these tags previously asking, so is this just a simple LPSY, or is it an intermediate transition before the price heads towards an upthrust? As of this moment, including this week, these three candles over here, you see they stay flat, or the body of the candle closes above this yellow key level. So this level, let me move to the right hand side, it's about 25 cents, that's extended all the way back to the automatic reactions in April 2021. There are obviously multiple support points over the last few years that make these a very solid level. So as of now, the price still found support at this level, and the selling, the days or the weeks we have red candles, the volume has been pretty low compared to those with price surges, the green ones. So there is, or there seems to be, the bulls are still trying to build up during this consolidation period for something bigger in the next month or so. If we look at this, because the price is still currently within the upward trend channel, this upward channel, this light blue box. So far it's the only trading sideways between the green and yellow key levels since 5 weeks ago, back in mid-July. So as long as this yellow key level is successfully defended by the bulls, it is just a matter of time that it breaks above the green, because this has been very strong. Even though there's a bit of selling over here, but they weren't very strong. So just like I said in the beginning, these two volume bars, let me move the screen a little, because I just noticed you don't see the bottom of the chart. So let's see, let me quickly adjust it. Yep, there it is. Sorry about that pause, but I want to make sure you see what I'm talking about. So there it is, those two lines pointing towards the two red volume bars over here. Those were what I'm saying, they were very low volume. So even though we've got red candlesticks, I don't see people panic selling. So that may be a reason why the bulls can build up this and eventually push it up further. If we go to the before we go to the daily, these I'll still keep them over here. But the sign of weakness, I think if the positive scenario has a higher percentage, this will probably happen later, maybe in fourth quarter. So I would stick this tag over here and see whether that would happen by or within the fourth quarter. So what I'm trying to bring out here in the daily chart is the sign of weakness hasn't happened yet, because this upward trend has been building up since the last sign of weakness back in beginning of the month, and it's still going on. As long as it stays above this yellow key level that we talk about, it's going to go towards to challenge the green, especially the dashed line that I've just drawn. It's like a lower low heading towards this green line over here. Today we've got a red candle bar. Not today, yesterday. Today we started with a little bit of green right above the yellow key line, trying to stay above this dash upward trend. If it does, the following few days will be a confirming signal whether it's going to head to the upthrust of the distribution in a daily time frame. One thing, if you have been following my sessions, you notice this triangle over here. If the price continues to stay above this dashed line, by the time we get to the first week of September, somewhere like end of this month to beginning of September, a decision has to be made, or the outcome between the fight between the bulls and bears have to have a result. Either it falls outside of this upward trend line and continue to range bound between the green and the yellow, or it has to break above the green and show us an upthrust of the distribution. If that happens, let's say this positive scenario happens, in the weekly, that's the same thing I just mentioned in the beginning. That's a potential challenge to the upthrust, or at least the level of the buying climax. So that's the positive scenario. If it is just horizontal trading that break outside of the yellow dashed line, if that happens, that means well, basically the bulls and bears, they kind of agree that this is the range that they're happy to trade within before some bigger news come out from the market that they can leverage to push the price either way, like either upwards or downwards. So there's no definite end as of now. But one more thing, adding the Bollinger Band Keltner squeeze indicator, the purple and the orange, you see that the purple has gone inside the orange already. So during the past around 10 days, the price has been consolidating and getting narrower and narrower. That's why the squeeze happened right now, and it doesn't mean it's going to have a drastic price move like 12 hours later. So when the squeeze happens, it can last for quite a while. Sometimes it can last for another week without a big movement, but we can anticipate that to happen. So one example we can take is from 1st of July. So at that time, the squeeze has already happened. Let me enlarge this so it's easier for you to see. So that was 1st of July, where the purple has clearly entered or like getting into the orange. But the big price move only happens on July the 9th. So it's not saying that once we see a squeeze, it's going to be, I mean, the big price move is going to be like happening the next day. It's not like that. Sometimes it will have some narrow range trading, much like these very short candle over there, and then boom, the price goes. And if you're new to this, don't just look at this example, because this is only one way it can happen. There are other ways where the squeeze will push the price downwards. So it can happen either way. So right now we are entering a squeeze, and based on the like the volume and all that I've talked about since the beginning, and also these upward trends, the chance of it, like of the price having a big wave upwards, seems to be a little bit higher than like going downwards to challenge the orange level, because like I said, there are multiple tests to this key support level at 25 cents, and over the past few days it has been very stable, staying above it. So it looks like there's a foundation built for the price to shoot up. But remember, it's it's always not absolute, but I'm just talking about like maybe 60-40 or 70-30 chance that is like the likelihood is towards the bulls, to the favor of the bulls. It doesn't mean the bears doesn't have a chance. And eventually, over the next few days, hopefully before the next session, because we've got 1 week from now to the next session, that we see some actions happening. If not, if the squeeze really continues like what happened in the beginning of July, that lasted for over a week, then by next session comes, we will be able to see whether, sorry, let me get back to the chart. So by the next session over here, if this really happens like what happened in July, that a very narrow range of very short candlesticks happen, then like if we have very short candlesticks happening over the next few days, then it's getting even clearer that some form of big move is on its way. So you can prepare, and always, whether you're bull or bear, set your stop loss. If it happens before our next session, good luck. Hope you pick the right side. If it hasn't happened yet, we'll take a look and see what happens